E mi perdo nei tuoi baci, dentro il cuore si mi bruci, come il sole d'estate ti voglio con me sulla pelle che va.
Hey guys, thanks so much for clicking into the webinar. I'm Jas with REC with my partner Simeon.
Hello everyone.
Guys, we are so excited to bring you this exclusive pre-construction condo investment opportunity. Simeon, how does an investor make money in pre-construction condos?
Pre-construction condos represent a huge opportunity. There are 5 big sales cycles from the time a project is launched to the time the bricks and mortar are up. In this case, it represents a very exciting opportunity because it's both the absolute first pricing in stage 1 of the actual condo, but it's actually phase 1 of a master plan community that's going to be built over the next 20 years.
So essentially, an investor purchases a unit, and then the prices are going to increase about 5 times.
Minimum 5 times.
Minimum 5 times. So obviously you want to buy at first access.
Ground level.
Why is that important to our guys?
We were able to get an exclusive allocation to Keyspire through our friends at Cornerstone and via one of the biggest developers in the city of Toronto, which is the Menkes family.
I'm so glad that you mentioned Cornerstone because we sat down with the president of Cornerstone Realty, Shab. You're going to have a live listen into our conversation where we dive into the location of this project, less than 5 minutes away from transit, and why that's obviously
less than 5 minute walk.
Less than a 5 minute walk. And we also talk about the builder Menkes, which, as Simeon mentioned, is one of the top 3 builders in the country. We're also going to talk about the incentives. Really quickly, Simeon, what are the 2 main incentives that we like to give to our Keyspire members?
The top 3 are obviously the right to lease the unit while it's significantly completed on occupancy, the right to be able to exit this investment should you have to, want to, or need to, which is the right to assign. Number 3, we have capped off the development charges that are one of the closing costs at the end. This is very significant, and you'll tell everyone why. Last but not least, we're going to be managing this unit for you. We're going to property manage it and do tenant placement and screening for you. And that essentially turns this investment between the 3-year construction period and the 2-year of management that we're going to offer to you free of charge, complimentary.
Yeah.
It becomes a 5-year turnkey money maker.
So for our out-of-province members, it's a fully turnkey, as Simeon mentioned.
And in-province members, keep doing what you do.
Yes, for sure.
Let us do what we do.
Enjoy the rest of the webinar. Simeon, I know you got a lot of work to do. Thank you so much, my friend.
Thanks for having me, bud.
Take care, guys. Sitting down here with Shab, president of Cornerstone, one of the country's leading real estate firms when it comes to pre-construction condos. Let's talk to our viewers about Vaughan Metropolitan Center. We're going to speak about the building, we're going to speak about the builder. Let's talk about the area of the Vaughan Metropolitan Center.
Yeah, absolutely. I mean, the Vaughan Metropolitan Center is supposed to be the city center, the epicenter of Vaughan, city of Vaughan. The city of Vaughan has been going through this evolution of change with employment, infrastructure, and residential growth. So Menkes Developments actually has taken a big role and big ambition in that neighborhood. Vaughan sits very strategically in the GTA, Greater Toronto Area. It sits right in the middle of the 905, the surrounding neighborhoods that everybody essentially would have to link to if they want to be part of that mobility hub. With the new subway extension that's taken us, 20 or 30 years?
And it's finally there. It's not that we're talking about it anymore.
Right.
I'm so excited, right? Because we needed this subway to go into Vaughan.
Right.
And now it's there. It's in use, been in use for a little over a year now.
Absolutely, right.
And now commuters can get right from Vaughan at the top of, it's just right outside of the 416 into the 905 area, but they can get into downtown Toronto within about 40 minutes.
Yeah, it's interesting what you said though. You said from Vaughan you can get to downtown Toronto. But what I want to tell you is you can get from downtown Toronto to Vaughan.
I like that. And why do you say that?
Because Vaughan right now is offering tax subsidies to massive commercial developers and employers. You see KPMG, PwC, Deloitte, Miller Thomson, law firms, accounting firms, and more. They're all shifting from various other parts of the GTA, Greater Toronto Area, to Vaughan. Vaughan's effectively offering a 1.65% property tax.
To get
Downtown Toronto is 2.4%. So if your building is, let's say, a commercial building operating at $350 to $500 million, you're effectively saving anything between $2 to $5 million based on the tax subsidy. So it makes a lot of sense to, that's why I was talking about the emerging market.
Right.
All employers are going to start shifting to Vaughan now in the GTA.
That's important from an investor's perspective because that's where the tenants are going to come in. When you purchase a condo, you know that you're going to have tenants that are going to be working in the area.
Absolutely.
And especially that younger generation, right? 25 to about 35.
Absolutely.
They want to be very, very close to where they want to live and work in the same area.
Vaughan has been going through a drought period in residential real estate. And now if you look at a lot of the larger developers are starting to gravitate towards that market, obviously they're business people, they want to bring the supply to that area, and the demand's just pent up and sitting there. If you recall, a couple of years back in 2017, I sold a project in Vaughan that was the best-selling project in GTA's history.
Yes.
I sold 1,700 condo units with the support of you guys, with REC.
And how
and that sold in 6 weeks, we set the record in GTA.
Yes.
So the Vaughan Metropolitan Centre, you asked me.
Yes.
Is the intersection of Jane and Highway 7. So if anybody's looking at Google Maps, if you just put a pin at Jane and Highway 7, if you look at the four corners of that intersection, wherever there's massive land is effectively part of it. It's 442 acres of land. Right? We are in the southwest corner of that quadrant.
Okay.
We effectively have about 65% of that Vaughan Metropolitan Centre.
Why is it so important to be so close to transit? Like, what have we seen with values from an appreciation perspective, as well as just the rentability of your investment?
The subway extension is there. And effectively, since last year, the riderships increased by 60%. Wow. That's a huge number.
For sure.
Right? And that's really helped us. But you also have to remember that the Greater Toronto area really focuses on education in the sense that they look at York University as one of the top universities in Canada. It has Schulich School of Business, right? And it has Osgoode Hall Law, one of the top law schools in the country, if not the number one for corporate law, and a huge political science discipline there as well. So the university itself has 2 subway stations. It's crazy, right? There's 60,000 students, 7,000 faculty members.
Right.
They all live within the area of the university. Mobilio is actually about 1 stop away now, effectively, or as you could say, about maybe 2 to 5 minute subway ride away from it. So if you know you're on a subway line, you will always win. You will never ever lose. Like, it's just
from an investment perspective.
Any perspective. You get your hands on real estate next to a subway station, you are a winner. You can't lose.
Yes.
I think in 10 years, you will not be able to buy real estate next to a subway node.
Why do you say that?
There won't be any space left.
There just won't be any land.
Yeah, you gotta, there's a sprawl. We have the effective
Greenbelt legislation.
Greenbelt, thank you. Greenbelt legislation that's really pushing the intensification to the core areas. But if you look at it, Vaughan is now part of the core area because the subway is linked to it now. Now Vaughan becomes a core neighborhood.
The neighborhoods around in that area are very affluent. You see multi-million-dollar homes.
Average household is about $1 million in terms of resale trading value.
Right.
And the product that we're bringing in is to give value of livability and double occupancy product in most cases, but is sitting almost half the price of that. And Vaughan, if you look at the current marketplace, Vaughan is half the price of downtown Toronto.
Yes.
Mark my words, come next year, you'll be up at least 5 to 10% in cost in pricing.
In terms of
just
appreciation.
Natural appreciation.
I totally agree with you. It's why this project excited REC so much. Obviously, the success we had with our members at the project we did a couple of years ago. Phenomenal success there. They've seen a huge increase. Now, moving forward, we still have 120,000 people coming into the Greater Toronto area year over year for the next 10 years. We're looking at, with net migration, and you know this, Shab, we're going to be looking at close to 1.4, 1.5 million people.
Absolutely.
And no longer can they buy like a starter home as a first-time home buyer, or a tenant cannot buy and or rent a single-family home. It's just it's too expensive. So what do they want to do? They're okay with 500 square foot condos that they essentially use as hotel rooms, right? Because they work a lot and they also play.
Absolutely.
And so it's nice from an investor's perspective because we're always going to have that steady flow of tenants coming in.
The condominium is composed of 3 buildings. Effectively, one will be about 18 stories. Second building will be 21. They're linked by the podium, where we'll have a rooftop terrace. That's about 550 units in total.
Okay.
have 24-hour concierge, mix of beautiful amenities. Price points you're looking at anywhere from the low 300s upwards to, let's say, about $600,000. It's a wide range we've done, again, to appeal to the average.
It's so exciting to hear that we can purchase and invest in the Greater Toronto area, because everyone thinks that everything's at $1 million. No, you can invest in the 300s.
Absolutely. We'll have bachelor product designed for in the low 300s.
Yes.
And if you're actually depending on the listener's appetite, if they're saying, listen, I want to get a taste of this, I want to see how this works, there's an entry point, which is bachelor's. That'll appeal very well to the university students that would want to rent, and it's so easy to rent and handle.
And just somebody who gets just out of school.
Right.
Like, majority of my portfolio, and my viewers know, it consists of pre-construction condos, and I buy and hold. My strategy is just buy, hold it. I actually like bachelors. Like, I have a bachelor unit. Reason being because the person in there is not going to stay there for too long.
Right.
And so as they leave,
taking advantage of market rents.
Well, right. They leave and someone comes in. I'm going to increase the rents. I'm able to do that. Right.
You got to break it apart where you say, if you want to squeeze every dollar out, you go for a studio or one bedroom.
Right.
If you do not want to deal with the management component or the servicing component and you want someone stable, you always go for 2 bedrooms. But long run, 2 bedrooms always outperforms in value than any other product.
Menkes.
Right.
I know Menkes very well. You know them even more than I do.
Absolutely.
Their story.
We always say Menkes is one of the top 3 developers in the country. And it depends how you define those top 3 are. But these guys are a conglomerate and very, very good people to work with. I think this year is their 67th year or 68th year anniversary as a company. Privately held, multi-generational. So when these guys look at sites, if anybody looks at the Vaughan Metropolitan, the lands in Vaughan, they actually are involved to over 100 acres. So they're thinking of, when I buy something, I create something, my grandkids or next generation can live on with that story and that design and follow through to the end. And right now I'm working with the 3rd generation. If you look at the office buildings downtown Toronto, the best and the highest rated developments for office buildings held by the Menkes, LEED Gold, LEED Platinum status. They're phenomenal. Let me put it this way. They have One York, which is Health of Ontario Pension Plan occupies with Sun Life Financial. Yep. They're tenants of this developer. Let's put things in perspective. TELUS Mobility at 25 York is a tenant to Menkes.
Beautiful building.
Procter & Gamble, 4711 Yonge Street. Tenant to Menkes, 5,000 Yonge, and so on and so forth. They have many buildings they've built over the years, and they're assets for them. They buy them, they own them, they service them. But also what sets them apart is that they also have management. So when a building is finished, they manage the building in-house.
Why is that important?
Well, Menkes is their name, is the actual last name. So for them, a brand is extremely important. When there's a big development happening in Toronto, they tend to go to the Menkeses, get advice from them.
I want to speak really quickly about the incentives that are in place for investors, the assignments, lease during occupancy, and development charges that are capped.
Right. So it's really interesting you bring that up. And, I said your buyers, your viewers, your clients will make money naturally because of just the cost inflation. It's a tough business out there for developers these days because the cost just keeps going up, and with the city wanting, provide additional services, they need additional revenue, tax revenue, that is. Naturally, the prices will go up, and I think it's not much of a worry for purchasers these days. I think it's just picking the right location, right developer, and having that sort of good covenant in their agreements. There will be assignment rights for you guys. Your company gets that all the time. Your team gets that. Rental during occupancy should not have been an issue, and in fact, I would endorse it in this time. It's interesting I say that, right? Because a lot of developers don't want to give you rental during occupancy. I do. Because what I'm seeing is that I have a very strong balance of different buyer profile.
Yes.
So what will make our project really different is that we're going after the community sense. We're going after the average. So when you go after the average, again, we talk about necessity and having families and households occupy the space. You have a high percentage of people that will live in this building that are not investors at the end of the complete duration of the buying pre-construction. So at the end of the result, you're gonna get a lot of end users coming into this building, which helps manage low fees because they use the space, right? And it's not a high turnover building.
Yeah.
So for investors, they want to buy into neighborhoods. They want to buy into product of this nature because they have stability. There's much less risk.
The building's being taken care of more because it's by an end user, right?
Absolutely. So we make sure also to make sure there's a good deposit structure to bring in the investors because
Which
of
is very flexible.
Absolutely. So we'll do about a 20% over 2 years. Traditionally, we do 20% in 1 year in 365 days.
Max, you get maybe like a year and a half.
Right.
But to have,
I pushed the envelope a bit on this one.
And we really appreciate it because it makes it that much easier for an investor to get in, right, Shab? We know that if as an investor, we got to put 20% down.
Right.
But you don't have to come up with it all at once. It's flexible. Right. It's extended. So you have 10% essentially over a year, and then another 10% in the second year. You're able to get flexible and do something else with your money. Keep it under the pillow if you want.
Absolutely. And if I see a lot of agents doing rate of return calculations. So if you actually look at the return people are getting, and you break up the deposits and you do a time value of money over the duration of deposits, the returns are well over 30-40% per annum.
I know.
Right? As opposed to the simplest way to say, I'm going to put 20% in,
yes.
This is my profit, divide it in, and say, this is what I'm going to get my percentage, right? And usually still really good, 15, 20, 25% return.
Yes.
But if you actually look at when the deposits were provided and to calculate based on the date of your deposits, it's significantly higher return.
We mentioned assignments.
Deposit assignments, development caps.
I want to talk a little bit about how why we like to have an assignment in as a clause.
Absolutely, I think the assignment provision is really crucial. The reason why we put it in for investors, as you know better than most, is that if they have circumstances change to a lot of people, if circumstances change and you want to have the ability to assign the contract, you could do so.
Right.
Meaning you can give the ownership from the property to someone else. You sign the contract, it's like a stock almost. If you want to assign the rights and the benefits of that contract to someone else, you have every right to do so.
Very important. Financial hardship happens.
Right.
We want to have the ability to at least have an exit strategy.
The funny part is that's the idea and the notion behind it. But what ends up happening is that you guys end up flipping the property, making money from it.
Now, I myself, and I know, Shab, you and I have been doing this for a very long time, that if you buy and hold, long term, that's how to create real wealth in real estate.
You tend to do, if you look at analysis, you tend to want to buy, hold, plus minimum 2 years after the final closing. That's where you get the maximum return on your money.
Not only does the financial dust get cleared, but you also have literally the construction dust is gone.
100%.
There's a little bit more clarity. The guys who are on the market, you're not a commodity now, right? There's not as many people who are trying to flip. Just hold on to it. And with us, you might as well, because you take advantage of the 2-year property management and the 2-year tenant placement, right?
Absolutely.
Shab, I know how busy you are around the city, man. Thank you so much.
Thank you. Appreciate it, Jas.
Take care,
Always
Shab.
a pleasure.
Thank you, buddy.
Thanks very much.
E mi perdo nei tuoi baci, dentro il cuore si mi bruci, come il sole d'estate ti voglio con me sulla pelle i tuoi baci. E mi perdo nei tuoi baci, dentro il cuore si mi bruci, come il sole d'estate ti voglio con me sulla pelle i tuoi baci, mio caro